Imagine standing at the edge of a stormy sea, the waves crashing around you. Threatening to pull you under, this is the battlefield where Solana's price now fights for survival, and where every decision by a whale or retail investor shapes the tides. Over the past week, Solana has been battered, sliding from $206 to a local low of $156 in a brutal 15.38% correction, carving out a declining channel that has technical indicators flashing caution on one side. We see large-cap whales stepping back from the spot market, a glaring red flag that suggests their confidence has waned. Crypto quant data shows that average spot volume from whales remained muted during the initial rebound, and then, as prices plunged, Chain reported a single whale depositing 108,016 SOL worth $17.74 million into OKX and Binance, a move that almost always signals imminent selling rather than accumulation when the giants of the market retreat. Bearish sentiment can cascade, dragging prices lower as smaller players panic and the specter of further downside haunts charts and chat rooms alike. Yet on the other side of this storm, retail investors quietly accumulate. CoinGlass data indicates consecutive days of negative net flows from Solana spot exchanges, reaching $1.86 million overall and recovering from a peak outflow of $95.49 million on August 1st. This stealth buying creates a crucial floor under the price, an indication that retail sees value at these levels and is positioning for a rebound. The shaded zone between these competing forces holds the answer to whether $183 is attainable. In the near term, despite the mounting selling pressure, there is a case to be made for a bounce back toward the $183 mark. The RSI has retreated to around 41, teetering on the edge of the oversold territory, and the stochastic RSI has plunged to 0.07. Readings that often presage a relief rally as selling exhausts itself and opportunistic buyers step in. Historically, when Solana's RSI dips below 45 and stochastic RSI nears 0, the market frequently sees short-term recoveries of 10 to 15%, pushing the price back above recent pivot levels. Moreover, the $154 support zone has already shown some resilience. Each test so far has been met with increased buy-side pressure from retail, suggesting that any move down to that level might draw fresh bids rather than trigger a breakdown. If smaller investors continue to accumulate with conviction, they could absorb much of the supply that whales offload, stabilizing the price and setting the stage for a bounce. A recovery to $183 would require roughly a 17% gain from current levels. But if market sentiment shifts, say, on a broader crypto market upswing tied to a favorable regulatory development or a high-profile Solana ecosystem announcement, this move becomes plausible. Yet there are significant headwinds. The shift of whale activity from the spot market to derivatives is particularly concerning. While spot deposits flagged selling intention, the derivative market tells a darker story of short bias. Open interest in Solana futures fell by 7.28% to $9.3 billion, even as derivative volume climbed 4.62% to $26.72 billion, indicating that traders are more interested in betting against Solana's short-term prospects than in hedging long-term positions. The current long-short ratio of 0.9231 underlines that shorts slightly outnumber longs, and Binance data puts the short side dominance even higher, with a position ratio of 2.57. When derivatives markets skew bearish, rallies often struggle to gain traction, as leveraged short sellers can trigger cascade liquidations on even modest upticks, quickly reversing any initial upward momentum in such an environment. A rally to $183 could be met with aggressive short covering squeezes that snap back into renewed selling, making the climb treacherous and potentially unsustainable. On the fundamental side, Solana's ecosystem continues to innovate, with decentralized applications on DeFi, NFTs, and gaming drawing developer interest. Even amid network performance questions stemming from past congestion and occasional downtime, if the Solana Foundation or major projects announce optimizations, such as upgrades to improve throughput, reduce fees, or introduce enhanced staking mechanisms. This could reignite confidence among institutional and retail participants alike. Such catalysts have historically driven price rallies in Solana. As network improvements and ecosystem growth translate into renewed demand for SOL tokens, conversely, any further negative headlines, be they network outages, high-profile hacks, or regulatory crackdowns on staking services, could reinforce bearish sentiment, prompting whales to remain on the sidelines or to increase derivative short positions. Liquidity metrics across exchanges also paint a nuanced picture. Depth at the $183 level is currently moderate, meaning that a sustained move upward would require a meaningful increase in buy orders from both retail and possibly larger holders if the order book at that level fails to thicken. Even a brief spike to $183 could be whipped back down by selling pressure, trapping late bulls and feeding into a vicious cycle of stop-loss triggers and panic exits. On the other hand, if retail orders continue to accumulate beneath the current price, they could form a staircase of support, enabling a more stable progression upward. Key to this scenario is the broader crypto market environment. Bitcoin and Ethereum typically serve as bellwethers, and if they embark on their own recovery, rallies perhaps driven by favorable macroeconomic data or dovish comments from central banks, this capital could flow into altcoins like Solana, giving it the lift it needs to reach $183. The psychology of market participants should not be underestimated in a landscape punctuated by fear of missing out. Retail investors who have been buying the dip may become more vocal and visible as they recoup losses or realize small gains, creating a momentum narrative that attracts more buyers. Social media chatter can amplify these narratives, and in markets driven by sentiment, this can be a powerful driver. Meanwhile, biotech and AI funds, decentralized finance, DAOs, and other institutional players might revisit their models to determine if Solana's current underperformance represents a strategic entry point. If one or more institutional whales take a contrarian view, perhaps after a blowout in net outflows is priced in, they could execute significant buys that propel the price upward. Conversely, if these entities remain unconvinced by scaling roadmap or perceive heightened systemic risk in proof-of-stake networks, they will refrain from participating, leaving retail to carry the load. Short-term technical patterns also warrant close attention. A break above the upper boundary of the descending channel could trigger a rapid uncovering of shorts and draw in momentum traders, pushing price toward the $183 level. However, failure to clear even minor resistance, say around $168 or $172, would reinforce the bearish channel, leading traders to target the next support zone around $150 or lower. Volume on any upward thrust is critical. A rally on light volume may not be sustainable, as it would signal lack of conviction. In contrast, a surge in volume, especially from spot markets, would lend credibility to a genuine reversal and increase the likelihood of a successful run. $183 risk management cannot be overlooked for traders eyeing a push to $183. Setting tight stop-loss orders below the channel support or at the $154 level could limit downside if the market reverts to bearish bias. Meanwhile, profit targets around $183 should be adjusted to account for potential stop hunts by large derivatives players, investors seeking longer-term exposure. Dollar cost averaging into positions around current levels rather than making a lump sum entry can mitigate the risk of catching a falling knife if prices dip further. Those strategies must be balanced against the opportunity cost of being out of the market if Solana does spring higher unexpectedly. Looking ahead, macroeconomic factors will play a decisive role. Central bank policies, inflation data, and geopolitical tensions are known to ripple through all risk assets, including cryptocurrencies. A dovish shift from major central banks could buoy risk-on sentiment and lend tailwinds to digital assets, potentially sparking a coordinated rally that lifts Solana along with the broader market. Conversely, hawkish surprises or renewed economic uncertainties could tighten liquidity, prompting a retreat from volatile assets and capping any rebound in SOL. Additionally, any breakthroughs in layer to scaling solutions on Ethereum or competitive advancements in rival chains could sway capital allocation decisions, influencing whether Solana stands out as a prime rebound candidate. Ultimately, the question of whether Solana can return to $183 amid whale withdrawals hinges on a delicate interplay of technical, fundamental, and psychological factors. The opportunistic gap between supportive retail accumulation and bearish derivative positioning creates fertile ground for volatility. It's offering both risks and rewards if retail conviction remains steadfast. Network fundamentals improve and broader market conditions turn favorable. A climb to $183 could unfold as an organic rebound, marking a turning point in Solana's narrative. Yet if derivative bears maintain their grip, whales persist in their withdrawal, and macro headwinds intensify, any attempt to breach $183 may prove fleeting or completely stifled in this volatile theater. Traders and investors must navigate with vigilance, embracing both the allure of upside opportunity and the reality of downside risk. Ever mindful that in the world of cryptocurrencies, momentum can shift as swiftly as a storm at sea.